and again welcome to Parashar Notes of Classes. In today's video, I am going to discuss about the most important and interesting topic of financial management, that is cost of capital. Cost of capital, it is one of the interesting topic of financial management, and today whatever I am going to discuss in this chapter, that is useful for you in learning the concepts of cost of capital in a better and easier form. So please view the whole video seriously, and if you have any doubt in your mind, then you can put your comment on my channel and give your valuable feedback so that I can modify the videos on my channel. So please put your valuable feedback on my channel regarding the content quality of each topic, and please also subscribe the channel at the earliest time so that you can get upcoming videos alerts in advance. So here is the topic, cost of cap. Cost of capital, one of the most important topic in financial management, as we all know. And first of all, what are the contents which I am going to discuss in whole video? First of all, just look at the meaning of cost of capital. After describing the meaning of cost of capital, I am going to describe about the importance of cost of capital. What is the basic importance of cost of capital for a firm's point of view and from an investor's point of view. Then, after describing the importance of cost of capital, we just going to discuss about the measurement of cost of capital. What are the various ways of measuring cost of capital, and what are the basic assumptions of cost of capital, and what are the different factors of cost of capital, and what are the different types of cost of capital in this chapter. So these are the main contents of this chapter. So start with the first one, that is meaning of cost of capital. So here look at the meaning of cost of capital. First of all, divide into two main parts. We can divide it into two main parts when discuss about the meaning of cost of capital, cost and capital. So capital basically related to an investment portion which we invest in a company or a firm or for a business, and then what cost it occurs for us for our investment, that is called cost of capital for us. In similar way, we can say that in economics and accounting, the cost of capital is the cost of a company's funds, both debt and equity. Or from an investor point of view, we can say that the required rate of return on a portfolio's company's existing securities. So it is used to evaluate new projects of a company also. So cost of capital basically, if we consider from the investor point of view, for example, let's take an example. If I invest in a company and with 10,000 rupees, so what companies pays in return to me, that is the cost of capital for that company, for my investment. So what I get in return form, that is the cost of capital for that company. So in simple words, I can say that cost of capital is the rate which an organization must pay to the suppliers of capital for the use of their funds. So in simple words, we can say that cost of capital is the rate which an organization must pay to the suppliers of capital for the use of their funds. If I used some money from suppliers of capital, then I have to pay interest to them. That interest is cost for me and return for them. So cost of capital basically the interest charges paid by me to the suppliers of funds. So I think it's clear in your mind cost of capital meaning. Cost of capital basically the cost whatever the cost we provide to the to the suppliers of funds in our company, that is the cost of capital for us. And the return form is the return for those investors. So for a firm's cost of capital is a weighted average cost of capital of each component, that is combined cost of each type of sources by which a firm raises funds. So weighted average cost of capital plays an important role in taking an investment decision, or it's a very useful tool for capital busting decision also. So here we can take some examples of cost of capital. For example, cost of equity, cost of preference shares, cost of debt, and weighted average cost of capital. So after describing the meaning of cost of capital, basically the meaning is should be clear in your mind. There should not be any doubt regarding the meaning of cost of capital in your mind, because the cost of capital is very simple word, that the rate which we have to pay to our suppliers of funds for investing in our company is called cost of capital for us. Now, after describing the meaning, just come to the point of importance of cost of capital. What is the importance of cost of capital in financial management decision? So, cost of capital aid with business and investors in evaluating all investment opportunity. First of all, the basic importance of cost of capital for a company is that it aids business and investors in evaluating all investment opportunities. So if we evaluate to all investment opportunities, then we have to use cost of capital for that. And the importance of cost of capital can be stated in terms of the following points. Here are the points. So you have to write the points when the question asked about give the importance of cost of capital for a company. What are the basic points which you can describe in importance of cost of capital for a company? So here are the some points. Look at the first one, main point. The main point is contribution it makes towards the achievement of maximization of wealth of shareholders. If the firm's return is more than its cost of capital, then excess portion of the return can be used in several ways. So first main importance of cost of capital for a company is that cost of capital makes contribution in the achievement of maximization of wealth of shareholder. That is the objective of current objective of companies. So cost of capital makes towards the achievement of maximization of wealth of shareholders. And how it is possible? By applying different ways. First one, wealth of shareholders is increased when the rate of return is exceeds cost of capital. Then the company can use in two different ways. First one, for distribution among the shareholders in the form of higher dividend than expected rate. If the rate of return exceeds cost of equity or cost of capital, then company can distribute the excess amount among the shareholders in the form of excess dividend. Secondly, for reinvestment within the firm for further in earnings. If rate of return increase cost of equity or cost of cap, then it can be used by the company for reinvestment within the firm for future earnings. So in the two ways, company can use cost of capital for achieving the objective of firm, that is wealth maximization of wealth of shareholders. So first basic point of importance of cost of capital is it helps in maximizing the wealth of shareholders. How it is possible? By applying two different ways. If the rate of return exceeds cost of capital, then company can use it in two several ways. First one, it can distribute in the form of dividend among shareholders. Second one, it can use for reinvestment opportunities. Second main point of importance of cost of capital is that cost of capital, when used as a discount rate of capital busting, helps accepting only those proposals whose rate of return is more than cost of capital of the firm, and hence results is increasing the value of the firm. So second main point which describe the importance of cost of capital for a company is that if we take cost of capital as a discounted rate of return in capital busting, then it helps in accepting only those proposals whose rate of return is more than the cost of capital of the firm, and hence result is increasing the value of the firm. So second main importance point of cost of capital for a company is that cost of capital can be used in the form of discounted rate of return in capital busting decision, and only those proposals are accepted by a firm whose rate of return is increasing than cost of capital. Then third basic point of importance of cost of capital is cost of capital has a useful role to play in deciding the financial plan or capital structure of the firm. So third basic point of importance of cost of capital for us is that cost of capital has a useful role to play in deciding the financial plan or capital structure of the firm. So there are three basic points which describe the importance of cost of capital for a company. First one related to cost of capital plays an important role in achieving the objective of firm, that is wealth, maximizing the wealth of the shareholders. Second basic point of importance is capital busting is useful tool taken as discounted rate of return in capital busting decisions. Only those proposals are accepted whose rate of return exceeds cost of capital, and those are rejected whose rate of return decreases to cost of capital. Third basic point of cost of capital importance is that it plays an important role in deciding the financial plan for a company or capital structure of the firm. So after describing the importance point, three main points you have to write up. Then come to the next one, that is what are the basic assumptions of measuring cost of capital. What are the basic assumptions of measuring cost of capital? Or if we want to measure the cost of capital, then what kinds of assumption which we have to follow? So there are two main assumptions which have to follow by a company in measuring cost of capital. First one is business risk of the firm is unaffected by the proposal being evaluated at the cost of capital. So here the first basic assumption in measuring cost of capital is that business risk of the firm is unaffected by the proposal being evaluated at the cost of capital. So here the business risk of the firm is unaffected. There is no link between cost of capital and business risk of the firm. Second main assumption is that financial risk of the firm remain unchanged whether a proposal is accepted or not. So two main assumptions followed when measure cost of capital. First one is business risk of the firm is unaffected by the proposal being evaluated at the cost of capital. Second one is financial risk of the firm remain unchanged whether a proposal is accepted or not. Then after describing the two basic assumptions of cost of capital, the basic assumption should be clear in your mind. First one related to business risk is unaffected by the cost of capital, and financial risk remain unchanged whether a proposal accepted or not. And then the next term in this video is what are the two ways of measuring cost of capital. So what are the ways in which we can measure cost of capital? So there are two main basic ways which we follow in measuring cost of capital. First of all, the first basic measure is computation of cost of each source of capital separately. Computation of cost of each source of capital separately. For example, cost of equity, cost of preference shares, cost of debt, cost of debentures, and cost of retained earnings, etc. Then second main way to measure cost of capital is computation of combined or composite cost, termed as weighted average cost of capital, or that is used in investment decision, or we can say that is used in capital busting decision also. So two main ways by which we can calculate cost of capital. First of all, by calculating cost of each separate source separately, and second one, computation of combined, composite or weighted average cost of capital.